Who joins us now live from Bell Direct from Sydney as well, just for a bit of a thought on this. A2 Milk, Julia, as we've just been discussing there, they've come out sort of saying, look, the move from Nestle they think might be actually an advantage for them. They're obviously a first sort of market mover in this space. Do you think there is still upside there, even though we are seeing an increase in competition now from some of these bigger players like Nestle?
Look, I've been a big supporter of A2 Milk, and look, when I look at these companies, they're not so much just a commodity, they're really a marketing brand, and when you have loyalty to that brand, you're very unlikely in the infant baby formula area to switch brands. So look, A2 Milk, it's got around about a 5% market share in terms of the Chinese market. Nestle is much bigger, it's got a more than 10% market share in that market. But what we've seen from the 1st of January is that the number of brands over in China has decreased from over 2,500 to under 1,000 brands. So look, I think that's good news for all the players in the market. And Nestle, look, there has been a refocusing on some of the growth areas. They recently had an activist shareholder join the company. So back in November, there was a restructure, especially of the infant formula division. And they've been trying to look at ways to grow and also increase margin in their business. And if you have a look at Nestle's share price over the last 52 weeks, it's been pretty flat compared to A2 Milk, which of course is the best performer in terms of the ASX 200 index. So look, I think it's a positive sign that you're seeing a big company like Nestle trying to muscle in on the growth of A2 Milk. But look, I think this is also a growing market. It's one where the one-child policy has disappeared, a number of brands have disappeared, and look, I think A2 Milk is still going to be able to grow very strongly in the type of market we're in, despite Nestle looking to launch that brand. And look, just because a big player launches a brand doesn't necessarily mean it's going to be successful, as we've seen from Blackmores and Bega trying to muscle in on the infant formula market. Mothers go on the reviews and the actual infant formula and whether it agrees with their babies as well.
All right, look, so certainly saw that one as a top mover. While we are talking agri stocks, one that was to the downside and fair bit of pressure today was Australian Agricultural Company. I think at the start those shares were down about 12%, to close down 8.2%. A fairly disappointing update from the company, would you say?
I mean, we were just talking about A2 Milk, which I consider more to be a marketing company than a commodity company. And now we're talking about Australian Agricultural Co., which seems to be doing exactly the opposite. And that's moving from a marketing company to more of a commodity-based company. And I guess the problem with commodity-based companies is that it's very difficult to get a premium for your product. You just take what the market is going to give you. So Australian Agricultural Co., you know, in the past they've moved to this vertically integrated model. They've been moving to premium brands like Wagyu beef and really trying to make a name for themselves out there to get that extra premium for their product. But today we heard something a little bit different, and this is interesting. This is Australia's largest cattle company. Its largest shareholder is actually a British billionaire, Joe Lewis, through his trustee Brian Gilton. And look, there's been lots of speculation about this company possibly being privatised down the track and Joe Lewis taking over the whole company. But today we heard a massive U-turn in terms of its strategy, and that's turning back to live cattle sales. And I'm not sure how great a move this is, because we have seen from companies like Wellard in the past that live cattle can be an up and down road. I mean, we saw Wellard, I think, listing above $1.50 in its initial IPO price. Today I think the price was around about 12 cents, and of course we've seen those massive profit downgrades coming through for Australian Agricultural Co. as well. So interesting to see that backtracking in terms of its strategy, the share price being impacted because of those profit downgrades. But altogether, I'm not sure going back to live cattle sales is the way to really win back market share, although it might cut down some of those costs related to their abattoir over in the Northern Territory.
And Julie, what has gone wrong with Australian agriculture? Because I've got to admit I haven't followed it, but I do know beef prices have been very strong over the last couple of years. I know that every billionaire now wants to get into cattle, and you think the value of the properties that they own must have risen over the last couple of years. Why has the share price been so weak?
Look, when I think of Australian Agriculture Co., you'd think that the company was doing well because, as you mentioned, cattle prices have been doing well. What we have seen is a lot of rain in North Queensland, and look, that relates cattle prices because it means there's a lot more grass and less chance of cattle being killed prematurely and making their way to our plates because of things like drought. So I guess when you have a look at Australian Agriculture Co., one, the cattle price is important and that's been relatively strong, but number two, the volumes are important as well, and the sales volume is what seems to be letting Australian Agricultural Co. down. Not only that, they do seem to have some legacy contracts related to their abattoir which seem to I guess cause cost inefficiencies, which they're trying to correct at the moment. There's a new management team that's trying to write the strategy, but altogether I think this is a company that should be doing relatively well. Australian beef, it's wanted by the rest of the globe, but unfortunately they just haven't seen the sales volume coming through. They have seen some relatively good results related to their Wagyu product, but in terms of their beef cattle sales, it's the volume side that's really seems to be letting them down. And of course they've moved to that vertically integrated model, which doesn't seem to be working for them. So I guess it's their sales channels that needs to be corrected, and I'm not really sure about the move back to live cattle.